Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. We have jobs tomorrow, non-farm payroll, and I'm going to talk about a counterintuitive play that you're probably not thinking about. Before I get to that, if you like what I'm saying here, you sign up for our research. You get a 14-day free trial. I write the Morning Express with my partners. I write it S&P, gold, crude oil, silver. My other partners, we got corn, wheat, soybeans. We got the softs. We got FX. We got bonds. So sign up for our research. Check it all out. You get a 14-day trial. And our videos go out daily too. Let's get to it. Now, jobs tomorrow. 700,000 is expected. What we had today, we saw the S&P move up pretty well. Small caps, the Russell move up. The Dow did late in the day, got up 100 points. Overall, though, it's been a good week for stocks, and we've seen some follow-through. The Dow does have a nice bull flag. I've been talking about it each day on our research. The S&P, it did hit our target today, 4307, 4309. And we head into jobs, 700,000 employment gains in June is what's expected. Now, do we get closer to that million? Does it speed the Fed up? Now, that would turn this market around, most likely. We don't know exactly how the market's going to react, but that's probably what would happen. And then we get another Goldilocks number, 600 to 800,000. That's going to be favorable for the market. We keep the party going. Now, looking at the landscape and looking at how the bond market reacted to the Fed's more hawkish, less dovish narrative at their most recent Fed meeting, basically they know that the Fed buckled. They caved to criticism for them not acknowledging inflation. There's only been 2 inflation numbers, but that's what we're looking at right now. And the bond market rallied sharply because it's pricing in peak inflation right here, especially if the Fed is going to start tapering assets and then pricing in rate cuts end of 2022, start of 2023. So what does that mean? Well, if we get a miss tomorrow, if jobs come in 500,000, come in below 700,000, somewhere below there, even a big miss, usually the Treasury market would rally as it's a safe haven bid. But guess what? We believe that the Treasury market would sell off and rates would rally upon a data miss tomorrow. Because guess what? It means the Fed's not going anywhere. The party's still going, and inflation is going to come. More inflation. So that's our play. Look for a miss in jobs, and you probably get a knee-jerk reaction in the 10-year higher. Fade that move in the 10-year, and that's what we're looking for. So got the S&P closing out of resistance, big level. Got the Dow breaking out of a bull flag, but it's facing a trend line. NASDAQ has softened up a bit. We've been expecting the NASDAQ to soften up. And then you got crude rallying huge here today and giving it up, 76 and change. We have a big level, rare major 4-star resistance just below $77. We've been bullish crude for a while. We've been bullish crude this week. We've been bullish on gasoline as well. Both of those had left pretty big tails today. It's concerning, but you don't want to start fading that until they break below a trend line. Look at a trend line from middle of May in crude oil. It comes in right at today's low. If we take out today's low tomorrow in crude oil, that's when you want to get short. Don't try and picking a top. Until then, we want to be buyers, and we're going to be playing this thing from the long side. Now, looking at the metals, they're trying to bottom out. I mean, the gold has actually done pretty well off of that low of 1750 here earlier this week, given the fact that the U.S. dollar has strengthened just a bit. It's focusing on the fact that Treasury is staying up. So ultimately, if that jobs miss does come in, and then you get the Treasury pullback, overall, we would expect that gold does go higher because the dollar would be lower, and then inflation narrative is going to stick. You see gold kind of recoup some of those losses from after the Fed. So gold, silver, platinum have all battled off of the lows of the week, but they still have a lot of work to do to recover some of that damage that came from the last 2 weeks. We have all those levels laid out in the Morning Express. Check it out, but give us our trade desk a call. We're here to help. 312-278-0500. Remember, the futures trading involves substantial risk of loss and is not suitable for all investors.